Jerry. Welcome back to Face.
All right.
Good
It's great to
times.
be here. Yeah, Dale, can you hear me okay?
Yeah, I got you loud and clear, Jerry. So, you glad 2022 is winding down here?
Oh, wow. What a year, huh? This is one for
Yeah,
the history books for sure. I mean,
yeah.
after doing this now for 25 years, even 2008 now is beginning to look like a a
It was a
dress rehearsal.
picnic. It was a picnic. Yeah.
Sure.
Do you want to share your screen with us, Jerry? You do some great technical work and you
Oh,
cover
sure.
everything. I'd like to start off with this is the time of the year that you start looking for narratives and themes going into 2023. What's
Yeah.
top of mind for you? So, okay, we could start here. All right.
Well, yeah, we can certainly start with the S&P, but actually, I have another chart. Let me see if you can see this one. I'm going to show this one first. Do you see the Bitcoin
Bitcoin?
chart here? Okay,
Yeah.
you see it. Okay, good. So we'll begin with Bitcoin. I heard the mention about silver and precious metals earlier. I was chuckling off the air listening to your dialogue on the topic of precious metals. We sat through Dale, what was the worst episode of inflation in 40 years. And they kept pounding it into our brains every single day we turn on the financial news. The inflation is sky high. What was interesting was that all the traditional inflation hedges, and I say, quite frankly, almost all of them that I can think, most of them, I should say, really kind of stuttered amid the whole thing. Now, I am a long I'm long on silver, I'm long on gold, but I own gold as somewhat of a insurance policy. I've always viewed it as insurance, on the fiat experiment. And then silver, to a lesser extent, I'm less exposed to silver, but I still believe that silver has a nice long runway. But it is funny though how it's perennial, that it's always going to go up, but sometimes or many times it doesn't. I think 2023 is going to be different, and the reason is probably let me show you a dollar chart that might because this is really what it's all about. I mean, this is really what the whole year was really all about, was this incredible ascent of the dollar. And the dollar, we provide ongoing commentary to our members. We provide a weekend report that you talked about with all the different charts. What we were telling our members was that about 120 on the US dollar index would be the peak we would expect to hit. We didn't even reach that. We hit about 114, and then we began to back off. And but that incredible bull rally that we experienced throughout 2022 and as part of 2021 was just literally a lid on so many different asset classes. And now
the wrecking ball.
It's a wrecking ball. And
that's what they called it.
Yeah. That's right. Absolutely. And many people don't realize that really was what was kind of sitting on top of many of the asset classes, causing them to really suffer, in addition to interest rates, but they're all connected. Now, as we fast forward to 2023, Dale, we know that the Fed is looking at a terminal rate of around 5, maybe 5.25. That's completely what we were expecting. In fact, 5 is not really that terrible, as long as it's not there too long. And so what the idea here is that what we're thinking, and this is literally just our analysis, we could be wrong, but we expected this dollar to really hamper the markets this year. We expect that as we move into next year, this dollar is going to continue down, maybe not precipitously, but it's going to continue down. And it may accelerate into the year as rates really begin to come down. And the new low that is set on the dollar may actually provide such a tailwind for precious metals and even for crude and also for stocks that this could actually turn out to be very bullish. So the declining dollar of 2023 may be the big story, just as the rising dollar was the big story of 2022. And if that's the case, then that bodes very well for gold.
Okay, well then let me ask you, what about that statement we could test 120 in 2023?
Yeah, well, I think the thinking there is really the Q1, Q2 uncertainty, because obviously earnings are going to have to come down. Earnings estimate, or earning estimates, and all of this are going to have to come down in alignment, and that, of course, could cause some pain. But I don't think that's going to happen. I'm just kind of hedging there, saying it possibly could in 2023 go back up, but I don't suspect that we're going to see a break above 120 at all, even in that case.
Yeah, how about down to par and then up to 112, 110?
Yeah, 110, 111. I think that even 112 would be a fine area. Maybe even only 108, 107, 108. It may just get a little paltry run.
Right. Okay.
So next year, I think, is setting up very nicely for a tailwind for assets that benefit when the dollar goes down. That's obviously gold. That's obviously silver. That's obviously oil, unfortunately, and then many other things as well. So I think we're going to get a little bit of relief thanks to this falling dollar next year, and I think the dollar could continue to go down even beyond, because really what's happened here is the Federal Reserve has really abused its authority. It's abused, and other nations are very well aware of this. I mean, they've been aware of this for a long time, but this latest punitive action that the United States did with its dollar, I mean, this reckless, poor monetary policy that they've been, subjecting us to, and also subjecting the world to, has consequences. And I think the dollar could, be the victim of this as we move forward. So I think, as much as we've talked about a rising dollar this year, I think the bigger story going forward is going to be a falling dollar. And so I think that's one of the big things we're watching next year. Now, Bitcoin, I also wanted to show you real quickly this cycle. So I got into Bitcoin, Dale. I was so fortunate to know about it back in 2011. I didn't buy it in 2011, sadly, but I did buy it in 2012. So I bought it the next year after I'd done some due diligence. Paid quite a bit more for it in 2012 than I would have in 2011, but that's not the point. So I've been in it for about a decade, and I've been through all these different cycles. And right now, when you listen to the media and you listen to the average retail investor, they think Bitcoin is FTX. They're convinced that Bitcoin and Bitcoin mining is Sam Bankman-Fried. Like, there's not a lot of separation here going on. And what's actually happening is very common. We've had our layman moment here in this particular bear market. This is a chart showing Bitcoin going back to about 2013. And every 4 years, due to the halvening cycle, you have these really interesting cycles that occur, bull and bear. And so what I want to show you is that if we go back to, say, 2014, where the bull market busts and then we enter into the first crypto winter, you'll notice how long this is. This is a monthly chart. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 months. After 14 months, it consolidates, the volume comes in and it begins to go up. The halvening comes right around in here, and then it has this nice cycle. Then we hit the peak. Remember back in 2017, we hit the peak back in December, January. So we start counting from the last up candle. So it's right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. And then after that 14, we begin to go back up. So we have 14-month bear markets, totally normal, and they're typically 80% drawdowns. Everybody forgets this. So we're in the middle right now of a 70 to 80% drawdown in Bitcoin, and everybody's running around with their hair on fire, not realizing we've been through this story every single time. And if you buy, at the end of that bear market cycle, the last 2 times, you've been a winner. So where are we at now? Well, we had this really nice rally that was, we have to admit, the macro environment did cause all kinds of distortions, even to the Bitcoin cycle. But you'll notice we really peaked out back in November. So November of 2021, a little more than a year ago. So here we go. Starting from there, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So our case, not just using this particular chart, this is just a nice visual for this morning for people to see, but more than just this chart. But when you look at the cycle analysis, what we are expecting on Bitcoin is that we're going to bottom this month or next month. Probably by the end of January, we're going to see a bottom in Bitcoin. It may have already happened, but maybe not. So by the end of January, we would expect Bitcoin to have bottomed, and then maybe a consolidation period, which then finally begins to lift off by April. So when we have the spring here in the Northern Hemisphere finally dawn, we expect that the winter, ironically, of the crypto winter is going to begin to thaw. We'll enter a new spring, if you will. And we're expecting that to be, sometime between January and April. So if you're long,
there will be growth in the spring.
Yeah, I really think we're getting ready to turn the corner on this. And it may even be that Bitcoin diverges from the stock market. They don't always run in tandem. And so it may be that we see a rally in Bitcoin and stocks are still consolidating and meandering and not doing much. So I am bullish on Bitcoin as we head into 2023. I think it will be a winner as the dollar falls, but I also am a bull on gold and silver too. Okay. Those two stories are.
Let me ask you about the S&Ps, Jerry. The big question and what's really kind of become consensus is that we still need that flush, take out the October low, one more flush under the October low to put in a better bottom. Do you think the October lows are going to hold? Because that would be contrarian to say, no, the lows are in.
Yeah, I would say that based on our analysis, the 34.91 low that was set back in October certainly could be tested. And if it's going to be tested, I would expect it to come in the first couple of quarters, probably Q1. And so the S&P 34.91, if we fall below that, I would be somewhat surprised. I don't expect massive growth in S&P 2023, at least the first half. But at the same time, I also don't expect some of the spectacular sell-off that we've been hearing from some. Even though earnings have to come down, we've already seen some spectacular damage to many stocks. And to think that we're going to continue to see this carnage, even though the dollar now is no longer rising, and even though that we know the terminal rate on the Fed is going to be around 5.25. And even though, so with all of that now kind of factored in, without some other kind of external shock that's unknown, I don't see the S&P just, falling off of a cliff in 2023, as some have envisioned.
Okay, I think the gorilla in the room is Apple. And the lows that we put in this week at 130, if you look at a longer term chart on Apple, I don't know, weekly, that would be a major breakdown under 130.
In fact, that's exactly right. In fact, we own Apple for the long term. We would consider any breakdown. It's funny you say 130. Look at my line here. It's right there.
Right.
Anywhere between 130 and 90 is a long-term opportunity. We're going to double our dollar cost average if we get below 127 or something in that range.
Yeah, like your 112 for the first stop and maybe 9 to the lower end of your zone. So how is the market going to be able to withstand and hold the October lows when such a large piece of the market cap is going to be under pressure?
Well, yeah, but think about Tesla too. That was an increasingly big part of the market cap, and that
wasn't 8% of
no, it wasn't. You're right. No,
index. It's apples and oranges. It got as much attention. But not, I mean, everyone owns Apple.
They do.
It's like their flight to, it's the new bond. Okay. Their safe money is in Apple. I think that the market doesn't bottom until we have some capitulation in Apple.
Got to shoot the generals. And this is definitely the commander in chief.
It's the president.
Yeah, it's the president.
The bubble.
So,
Mr. President Bubble.
Right, you're absolutely right. Okay, so let's say it dips down back to its 200 weekly moving average. Yeah, you're right. I mean, at that point, you're probably seeing immense pressure on the S&P at that point, obviously, and other major indices. But to me, I would say that represents a golden opportunity because we haven't been there for years. So I would almost be partially rooting. I would almost be partially rooting for that opportunity, and I do agree with you that. We've seen so many other major stocks, Meta, for example, a self-inflicted wound, or Tesla, obviously a self-inflicted wound. But with Apple, they've played their cards so well. I was absolutely amazed at Apple's handling of COVID and
Yeah.
handling of the supply chain.
China.
I was blown away. They handled it better than almost anybody in the whole. So this company knows what it's doing. And they also recently moved out of China, for seeing the writing on the wall, doing kind of participating in that nearshoring trend we've been seeing with many other companies as well,
Right.
moving back to the United States. That plays well politically. So I think Apple has got a lot of great brains here. I think they're very well connected, not just to the U.S., but also China. I think that any headwinds that arrive, they may outsmart them. And not saying they will, but I've noticed that Apple seems to have, quite a, they really, not only are they big, but they're big for a reason. They've outsmarted their competition. And so, we're
it's hard to find an apple bear, but there might be a worm in the apple.
True.
To $90. So, just something, I'm king, a low for the market based upon what Apple's going to do. So, okay. China's been on fire, Jerry. Have you been buying these stocks?
China's hot.
Really hot. I mean, they're easing, right?
They're
ahead of the curve.
They are. Their interest rates were already high. So while we were over here, with 0% interest rates trying to get our economy going, China had their interest rates near 4%, and they haven't lowered them. In fact, China has a lot of room to ease. And so China is another story for 2023. China has already admitted, Beijing has already said that the economy is going to be their primary focus in 2023, after saying for some time that they were more focused on other things, social things. Now, 2023, they are going to focus on the economy. That means they're going to be easing. They have a lot of room to ease. They have a lot of room to cut. And so that's going to be a boon for many oversold Chinese stocks. Remember, Chinese stocks peaked way back when all of the Cathie Wood stocks peaked, when all the high tech, all the low earnings stocks, and it was February 2021. So this cycle for China has been long and brutal, longer than it has been for many of the U.S. stocks. So February 2021, Chinese stocks peaked. We're beginning to see them now come out of the woods. And I think 2023, you'll see some really good gains. And I think about that story. Think about the story of the dollar falling, right, and China rising. Think about the story of U.S. growth slowing in the United States, and then China, even though they're expected to slow in 2023, they're still going to be much, much faster growth in the United States. We may get
diverging.
We will see the divergence, I believe, in 2023, whereas before it's been kind of covered up by all of this excessive policy by the U.S. and a lack of policy, quite frankly, by China.
Any other opportunities with a weaker dollar in foreign markets over U.S. markets? You're looking at?
It's interesting. I'm looking here for Turkey. I have a I have a chart of Turkey here somewhere. I'm trying to find out where I put that at, because the Turkey ETF, we have a really cool tool that we provide our members. I wanted to show you this. It's called our ETF leaderboard for anybody who likes to do ETFs. And Turkey, let me pull this over. Hopefully you can see this at the top here or on the screen. So this is the ETF leaderboard. And so Turkey has been number one, but Turkey has been number one now for eight weeks on top of our ETF leaderboard. And you can see it's just been running very, very, very nicely. And we had a $32 stop loss on Turkey. In fact, I don't know why I don't see that. I have it. Here it is. There's the Turkey ETF. Okay. So we have a $32 suggested stop loss on this thing. We've been following the 14 EMA. It's really respected. You can see here, the 14 EMA, it's been really respecting that ever since the October breakout. Yeah. Turkey's a hot market. And in fact, emerging markets in general, not just Turkey. There is a chart here that I have of the emerging markets that I think your folks will also find interesting. It's the S&P versus EEM. And you'll notice that the emerging markets, of course, outperformed large cap stocks in the early part of the 2000s. But in 2008, it's been the opposite. So we would expect that emerging markets could have a nice rebound here. Certainly in 2023, we're thinking of, when we think about some of those ETFs that are there, we think of Turkey. We also think of Greece.
Greece.
Greece
How
has
about
been
that?
hot.
Yeah.
Egypt has also been hot. Thailand is beginning to really work. Italy's been hot for a while. It's been stagnating a little bit. Japan falling after that big
Yeah.
surprise move.
Yeah.
But Europe in general, so like the Euro Stocks 50, F.E.C.E, that's also been a hot market. So Europe in general may continue to recover next year. So, those are
Okay.
some markets that we're looking at.
Some great ideas. You want to wrap it with one and then show people how they could follow you and get involved with you, Jerry? As you can
Sure.
tell, everyone, Jerry really does some high-level technical work, for outside of currency trading, for looking at equities. So, okay, that's a nice chart.
Yeah, I think maybe we just close out with at least from my side with silver. You're absolutely right. We do provide all kinds of member info on commodities and as well as stocks and ETFs, and then of course cryptocurrencies, options, and all of this, as well as currencies, which we rank currencies right now. And of course, the dollar has been the top, but we don't expect that to continue this year. So it's silver though, as you can clearly see, this one is itching to break out after years and years and years. And the reason why silver really could run this year in 2023 is because you have a couple of things. A, you have that declining dollar, that's bullish for silver.
Yes.
B, you have the reopening of China.
Yes.
The reopening of China is bullish for silver. And then you have not only the reopening of, then you have EV, of course, that's, solar demand. That's all very bullish for silver. But not only do you have the China reopening next year, you also have China reopening and saying, we're going to prioritize the economy and get it back in shape. So that means that not only are you going to have a reopening, you're going to have a reopening with stimulus, with lots of stimulus, very likely. So that could bode very well for silver next year. So we think that silver could very likely break out above the 27 level. And if you finally get that breakout, then you could certainly run up to 30, 35. And I think that represents a nice, really nice rally. Now, I know there's some, in the silver community who think, no, it's going to 1,000. I heard the joke. I'm not in that camp per se, but I do think that silver is going to be a winner this year. I think it's really going to perhaps surprise some, this year. As well as gold. So I don't want to beat that too hard, but I really want to say that Bitcoin, gold, and silver are going to be big beneficiaries, in my opinion, 2023 because of that falling dollar that we see.
Okay, Jerry. So best way for people to follow you. Also, there are some delivery problems out of Comex that sparked things this week too. Not enough physical in the Comex warehouse. So people have been talking about this for a long time. So there you go. Fierce truth, real profit. Love it. Nice tagline.
Yeah. Thank you. Yeah. Followthemoney.com. People can come here. They can check out. We have memberships. We also have a store. Maybe you just want to buy a course. We've created numerous courses on trading and investing and options and all of this. We also have memberships where you can just get access to our research on an ongoing basis. And anybody who's into trading or investing, we also have a coaching call we do with our members every Tuesday morning, so they can come on, ask questions, learn how to trade, learn how to invest. I really appreciate what you guys do, and I really appreciate being invited, because I know that you guys, it's nice to have. I've listened in several times to some of your calls when I'm not been on, and I've just really enjoyed the high value content you guys provide. So I think it's a great thing what you guys are doing. So thanks for the opportunity.
Oh, well, we have a bromance going, Jerry. I want to wish you and your family a very Merry Christmas and a Happy New Year. I think that your work is elite.
Thank you so much.
Okay, so really appreciate you coming here and with a giving spirit and sharing your ideas with us to edify our community, Jerry.
My pleasure. Thank you, sir.
All right, Jerry Robinson, everyone. The Twitter handle is at FTM, at Follow the Money.
Yeah, at ftmdaily.com. Oh, yeah,
okay.
I'm sorry, at FTM Daily, at FTM Daily.
Follow the Money Daily. All right, people are thanking you, Jerry. So thanks so much for being here today, and look forward to, we'll catch up with each other in the spring.
Sounds
See how
great.
things are shaping up, buddy.
I'd love that. Thank you.
All right. All right, everyone. That's a wrap for today. You could join the team in about 15 minutes for the morning edge. Remember, don't just count your pips, count your blessings. And we'll see everyone to wrap the week tomorrow for the PCE Live. Adios, everyone. Thanks again, Jer.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.